everyone, welcome back to Corporate Decoder, the place where we sift through the fine print, so you don't have to. Today, we're diving into NexPoint Diversified Real Estate Trust's latest quarterly report. And let me tell you, there are a few surprises lurking in the details. Some might even call them real estate of concern. Before we start, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below. Come join. First up, let's get a quick overview. NexPoint Diversified Real Estate Trust, or NXDT, is a company that invests in a mix of real estate stuff, from apartments to hotels. Think of them as a landlord and a lender all rolled into one. This report covers their performance up to March of this year. Now, before we get into the numbers, a quick word about forward-looking statements. This is where the company basically says, hey, we're making our best guesses about the future, but no guarantees. Basically, they're saying things might change, so don't sue us if we're wrong. Keep that in mind. All right, let's talk money, financial tables. Here are some key numbers from their balance sheet, which is a snapshot of what they own and owe. Total assets were at $1.17 billion, which is down a bit from the end of last year when they were at $122 billion. Think of it as slightly shrinking the pie, not growing it. And their total liabilities, debts, and other obligations are also down a little from $391 million to $381 million industry. Hence, the company has a lot of investments, so that is normal in this industry. Let's look at the consolidated statements of operations for revenues. Revenues are UP a lot, from $12.8 million to $29 zero neo. Looks like things are going well, right? Well, expenses are also up from $12.5 million to $23.5 million, and the net loss attributable to common shareholders from a $22.7 million loss to a $34.3 million loss to a 34 point. Basically, the company did well in revenues, but the expenses were too high. The cost of money, interest rates, and investments going south, unrealized gains, is very high. The loss per share increased as well from $0.59 to $0.80. Now to cash flows. These cash flow statements helps us understand where the money is actually going and is an important part of determining the underlying business of the company. This confirms our suspicion with a $35.1 million loss. We also have $7 million cash provided by operating activities, and $14.5 million cash used in financing activities. And this is mostly why the cash at the end of period looks healthy at $59 million. One interesting aspect of NXDT is how they structure their real estate holdings. They use what are called special purpose entities, or SPEs. These SPIs are like little isolated boxes, each owning a property. What this means is that the debts of one property don't necessarily drag down the others. Of course, it does not apply to all areas. The company owns a percentage of the properties themselves. For example, they own 100% of White Rock Center, Dallas, Texas. For some, it's with a group like Park City, Utah. Now let's talk about debt. Every real estate company has debt. The trick is to manage it well. What types of debts does the company have? Mortgage debt, notes payable, convertible note, and their maturity dates for the next few years. As long as debt is paid, business is good in real estate. So long, so good. A $35 million net loss and adjustments to reconcile net loss about $32 million. So could these two combined explain much of the differences? That will be a major part to focus on if investing. Let's check on some of the interesting investment stakes that this company has. For example, this company has a 52.8% ownership in NexPoint Storage Partners that specializes in the storage business, and 16.4% into Paraloon Arrow Equity Holdings 1 LLC. They do something with aircrafts. They also have 100% ownership of something called NexAnnuity Holdings Inc. Luckily, there has been no material issues found from what we can see, so that's good. So what's the big picture here? NexPoint Diversified Real Estate Trust is trying to juggle a lot of different real estate plays. They're making money, but also spending a lot. They need to manage their costs, especially debt, to really thrive. They're betting that their investment strategy, along with a recovering economy, will pay off. The company needs to be careful, as most of the money comes from taking on riskier investments, unrealized gain loss, versus a stable source of profits. For example, one of their real estate ventures is underwater. That has the potential to sink the entire company if more problems rise up. It should keep costs contained, so this is something that needs to be paid attention to the next quarter. Alright, that's our breakdown of NexPoint Diversified Real Estate Trust latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.